So hello guys, today is 26th of June 2026 and I'm gonna be drawing my levels before market opens at 9:30. So first thing I'm gonna be looking at is the 15-minute time frame, and I'm gonna be seeing what levels do we need to have marked off before market opens. So let's draw market open at 9:30. And New York lunch should be at 12 p.m. So from 12 p.m. to 1:30 p.m. So from noon to 1:30, we don't want to be trading, and then going on to 4 p.m. we could still look for trades after that New York lunch, right? So this is a frame where we don't want to look for any trades whatsoever. So we're gonna be trading from now to New York lunch, right? What do we want to see before market opens at 9:30, sir, New York time? So we want to be looking at swing highs and swing lows, right, on the 15-minute. This is on gold. What I'm doing is on gold and also on ES, right? I don't want to be trading more assets from besides gold and ES 500. So we're gonna be looking at prior to 9:30. The day prior, actually this was Asia, then London, and now New York. We want to look to the highs and lows for potential swings. What is a swing low, for example? It's a 3-candle pattern where we see that price has a bottom wick to the left that is smaller than the current bottom wick, and a bottom wick to the right which is smaller than the current bottom wick, right? So a higher bottom wick both in the left and in the right. As for same thing we're gonna be looking at the highs, right? It's a 3-candle pattern. At the left, we want to see a top wick that is that is a lower top wick, and to the right side a lower top wick, 3-candle pattern. So this would be our swing highs and our swing lows at the moment. But previous to 8:30, we had this swing high also. And that swing high created equal high at the right. If we see it's the same low, it's the same high. High here is 40, 44, 130, and here is 40, 44, 085. So by a pip is almost the same. This is equal highs. When looking at equal highs, we want to see to the right, and we have equal highs. We want to see to the right. Whenever we do approach those equal highs, see what happened here. These are equal highs. These are sellers that have placed buy stops above this level of 40, 44, 85 we've mentioned. So above there, we know that there are buy stops and also a lot of stops. The masses have placed their stops above 40, 44, 085 ish. Dropping down, sellers were in profit, and then that profit start getting those sellers start getting less profit as price came back up, and eventually we get close to this level of 40, 44, 85. This is what we want to see in the smaller time frame, because it depends on the way we create a structure getting close to 40, 44, 85 after knowing what has happened with those sellers that had profit until we got to this swing low at 39.82. We want to see what happened after this, getting close to 40, 44, 085. So at around these areas, right? We want to see what happened at around these areas after knowing So all this, right, from here to here, we want to see what happened on the smaller time frame. It's not the same if we just go up there in a straight pop off, or if we create market structure going up to 40, 44, 0.85. So that's what we want to be looking at on the smaller time frame in order to grab a potential trade. So the smaller time frame I'm going to be using is the 5 minute here. And if we see we don't really have that much of structure, I would like to see getting close to 40, 44, 0.85. Most of the times when we see a structure going up this way, creating like a kind of a stair of higher highs and higher lows, getting close to that level, at least a 3-step stair, right, we can anticipate then we're gonna have like a pullback, and after that pullback we can start hunting for trades at above those levels, right? So if we get rid of this one, we want to see this level that we had to the left. We said it was 40.44, and we said this is the equal highs, right? Then we have the swing low here. So at some point, price or sellers were on control in the market, going down to that swing low, right? Sellers were in control here, and we tap into this swing low. We don't want to see a retracement back to those equal highs like this. So it could be like this, but then at some time getting close, we want to start seeing market structure. If we have this market structure, all we need to do is wait for this break, then have a straight pullback, like no glitch, you know, no don't blink, straight pullback, and then the break of that high, and that's our entry. That's where the most of the buy stops are gonna be, more of 80% of the time in the right place. Here in this case, we could have our stops. We could have our stops at around this level, right below that market structure, or where there was clean traffic here looking to the left. And basing on that, we could look for a 1-to-1 risk to reward, or even to a negative risk to reward trade. But I would suggest looking for a 1-to-1 ratio. And the thing is, not always we're gonna be grabbing all these profits, right? It's not like a set and forget type of strategy. We need to know where are we gonna manage stops at. So we need to manage stops and trail stops pretty aggressively. The thing is that a lot of the time, depending on the amount of buy stops that were placed at above this level, well, price could go higher on a straight pop, and we just need to be managing our stops accordingly, right? Managing our stops accordingly. So it's all about how do you manage your stops in this position in order to get more of your trade, right? Managing stops accordingly. Once price is going up, we will be managing our stops. Price goes up a little bit, we manage our stops until eventually we get to TP, or price pulls back and we get out on stop, but that stop is in profit. So we get out of the trade, securing some pips. Right, price could reject here before taking a tap in our TP. Our stop would be here, and price then would reject like such, and then our stop would be hit, right? Because we will move our stop until that level where price has break into. And then we need to see to the left what type of range are we breaking into. But most of the time, this is the key area, right? This green circle I'm placing here is the key area, because it's where we understand that there are buy stops there. After explaining what I've explained of 3 concepts: equal highs or equal lows, and swing highs and swing lows, right? That's most importantly. And then how we approach those equal highs. I don't care how we approach a swing high or a swing low. I only care about how do we approach a equal high or equal low after this type of range. So we are basically taking some kind of breakout, or this entry that's named breakout on the NYSE stock exchange opening. But the thing is, we need to see that this is gonna be taking between 8:30 New York time and noon New York time, so 12 p.m. New York time. That's it. 12 a.m. New York and 8:30 a.m. New York. That's our window, and we're gonna be trading this. Specifically, if this pattern we see it, so for the sales will be the same thing. We are seeing this after 9:30 or between 9:30 and 12. That's like the exact place where we wanna take this type of breakout, right? It's not a breakout because it's market structure, but it's just scalping these three concepts, like swing highs, swing lows, and market structure in the way of equal highs and equal lows and breakouts. That's how we understand that if the masses has placed their stops here, there are also the buy stops of the masses placed here on this level, above this level. So the way we approach that is where the market's gonna get a little bit more, how do you say it, sensible or whatever, to a lot of orders getting activated and price running. Then yeah, we also need to see at the higher time frame, because the higher time frame is gonna tell us whether we are bearish or bullish, and if we are bullish on the higher time frame, we might be looking for buys, or vice versa.